Good morning and welcome to this weekend review of the week ending Friday, October the 13th in the 220 EMA Upside Breakout trading system. Now, disclaimer, I am not an investment advisor, I'm not recommending any stocks. Backtesting has limitations and all trading involves risk. So you need to do your own due diligence. This is for informational purposes only. If you missed the webinar on the 220 EMA Upside Breakout system, you can watch a replay. It's available at this link, edgeracer.com/details ASPX $CTX equals 220 EMA webinar. And you can watch that. It's available for replay right now. So let's go ahead and get started. If you want to know how to run these templates or where to find them, check out some of the other videos in this playlist where I go into those details. Today I'm just going to take a look at some of the reports and go over the information. So first off, I've run the report for the 220 EMA Upside Breakout on the list of CBOE weeklies, stocks that have weekly options, and I've sorted this list now by current percent gain. So this week at the top of the list, Mankind, and if we bring up a chart, which we can always do by double clicking, and I'll pop this on one side so we can then update our charts as we scroll down through the list so we can see what's going on. So Mankind bar here, and then we go back 1, 2, 3, 4, 5 bars. So pretty much unchanged altogether, slightly down, but it did make a big move during the week. But in the strategy, yes, it's still in the trade and slightly down from last week. So let's go back over here and we'll go down through the list. NAV continues to stay high in the list, but this week it's come down a little bit closer to the 20 EMA where the exit is, but it's still in this trade and it's still at a 35% gain. The entry was down here. If you remember, these two bars signified a buy alert, and then this bar here went through the entry stop and entered into this trade, and it's still in the trade. As soon as it touches the 20 EMA, it's going to be out. PBYI, so Puma Biotechnology, had a reasonably good week. Currently at 31% gain in the strategy. Micron Technology had a good week also. So Friday was here, and let me turn off the annotation. Friday last week when I did the review was here, and this week it ends up up a little bit from there. 39.66 was the close of last week. Close of this week is 40.37, but it did have this favorable excursion up here, but yeah, currently still in the trade. And come down through the list to see Dollar Tree has had a good week. GM had a very good week. So last Friday ended here. Sold off a little bit, did not trigger an exit, and is now breaking out to new highs here. So this is the strategy. It's a bare bones trend trading strategy. It tries to keep you in trades, gives a fairly wide stop, which is both can have positive and negative effects. The positive effect is that you don't get stopped out that often, but when you do, you could be quite a distance away from the most recent peak. So we'll just go down through the list, take a look at some of these charts. And these are all the good trades that are currently still open. On the other side of the coin, we go down to the trades that are open and currently show a loss. This one has not been open for very long, but it's showing a loss. And of course, this list is not showing trades that have closed. So you don't make money in the strategy until you can close a trade. So what I want to do now is just go ahead and look at all of the trades that were closed this week. So I'm going to close down this, or minimize this one, and bring up the trade simulation. If you want to know how to get this trade simulation done, take a look at some of the earlier videos in this playlist about this strategy, and I show you exactly how to do that. Here I'll turn annotations back on, because what we can do is it will actually point out with annotations exactly where the entry and the exit was in the strategy, and then the PL percent is actually what was really made in this strategy using backtesting. So we'll come down through this list. We've got quite a few nice gains here. So GPS or Gap had a nice gain of 20%. Then Abercrombie and Fitch in the same kind of industry group as a gap, had a nice gain, but closed as it crossed down through the 20 EMA. XAS did trigger an exit because this Friday's bar came right down through the 20, but then back up again. So, but we are dealing with intraday trades, and if you had your exit stop down here, you would have been stopped out in this trade. That's just the way the system has been designed and programmed, so that will get you out of the trade. And of course, if you're trading this for real, what you would do is every night you would take a look at the positions that you have open, look at where the exit stop is, and that's listed in the template, and then enter that into your trading platform. So that would have gotten you out at that point. And we'll just come down through the list. So Chicago Bridge and Iron, and so on. So some quite nice gains here, and then we'll take a look at the losing trades. And so the biggest losing trade was Fold, and you can see why that was a loser. It entered here. That was triggered by these two bars here would have triggered the buy alert, because they were the first two bars above the 20 EMA, and then it took quite a few bars, and the buy alert was never invalidated. So the buy alert existed all the way down here, but the buy did not happen until it crossed 10 cents above the high of this bar, and of course it opened up above the high, so the entry would have been taken at the open, and which happened to be around about the high, the most recent high, and it just from then continued to sell off all the way down to the 20 and immediately crashed into the 20 EMA, causing a loss of 10% in this strategy. The next biggest loser was Calmain Foods, and Calmain Foods again had a similar type of action. So the entry was taken quite a ways above the 20 EMA, and it just sold off back into the 20 EMA for this loss. And we'll go all the way down through some of these. So you can see how this strategy can end up losing. As I said before, it's a bare bones strategy, so you can put your own flavor to these things. You can decide on entries, whether or not you like particular entries. You can decide on exits. But as a bare bones system that is showing a profitable system, it just means that you are statistically more likely to get into good trades than into bad trades. So, but of course you can add your own flavor and try and improve your edge in this system. But these are all the bad trades. You see how they work. And the system is designed exactly like that to get you into trades and get you out quickly if trends don't develop. So that's why you tend to have more losing trades than winning trades, but the losers tend to be smaller losses. And then we'll go up through all of the winning trades, and we can see that the biggest winners, are around about, in this case for last week's exits, 20%, 15%ish, 13%, 10%, but the biggest loser we had was a 10% loser, so it went 10, 8, 6 and 4. So the winning magnitude is much better than the losing magnitude. And what I've done here is, on this trade list, I've just totaled up. So these are all the exits that occurred last week, so anything from the exit date of Friday the 13th down to the 9th, Monday the 9th, are all in this list, and I've just added up all of the P&L columns, the P&L figures, to find out if it would have been a winning week in closed trades, and it's a positive number down here, so yes, it would have been a winning week. So it's quite a good week in the strategy. And that marks the 5th review I've done actually of this system, where every week has actually ended up being in the positive territory. So pretty good. This system has been doing very well over the last 5 weeks. And as I mentioned before, it's slightly unusual to find that you have an equal number of, or maybe slightly more, winning trades this week than losing trades. Normally the percentage is not that good, and you might get only 35% or 36% winning trades and the rest being losing trades. So it's slightly unusual, but the system has well-defined rules, so we can actually monitor it, and there's no discretionary aspect to this particular style of trading. Of course, if you add your own flavor to it, that you may end up with some discretionary aspect, but I'm just reporting on the actual real technical system. So that's it for the week. Quick review, and we will go again next weekend. So watch out next weekend for the review of this upcoming week. Have a great rest of your weekend, and thanks for watching.